So for those of you who may or not be familiar with our organization, let me give you a little bit of insight about who we are and what we've been focusing on this year. Housing Opportunities Equal was established 50 years ago in 1971 to support the enforcement of the Federal Fair Housing Act of 1968. Since that time, we have served over thousands of individuals battling divisive housing practices, and we've been setting local and national precedents in fair housing policy. Today, we renew our commitment to ensuring that for everyone have equal access to housing. And we do this by confronting housing-related inequities on a systemic level. We also challenge the root causes of inequality faced daily by our clients. And we're able to advocate for changes in policy to ensure that everyone has a brighter future and that Virginia is a fairer state. We currently have 4 pillars of our strategic framework, which we'll be discussing over these community conversations. First of all, our accountability and fair housing, combating segregated housing patterns. Today, we're going to be discussing closing the Black-white homeownership gap and supporting Virginia's unstable housing environment. None of these issues are new to Virginia, not new to me, not new to you or our country or our communities. But by continuing to challenge the root causes of inequality faced daily, we are going to be in a position where we can continue to ensure that everyone has equal access to housing. Today, we're going to talk about a trend that Home has been tracking for over 30 years, the gap between white and Black homeownership rates. Housing policies that date all the way back to the establishment of 13 colonies has contributed to the blatant inequalities in homeownership and wealth gaps between African American and white households. Government-supported programs that almost exclusively benefited white people in our country founding days made it possible for white individuals to obtain land and pass down their generational wealth to their families. For a short period of time after Reconstruction, the federal government sought to make programs fair and accessible to people of color, particularly for those who were formerly enslaved. It was at a time when African Americans were promised 40 acres and a mule as a form of reparations for slavery, but that never materialized. In fact, Congress awarded some former slave owners only $300 for each slave lost as a result of the end of the institution of slavery. Then there was the Civil Rights Act of 1866, which said that all male persons born in the US had the right to inherit, purchase, lease, sell, hold, and convey real and personal property. Unfortunately, the laws to enforce anti-discrimination were null and void, and then the Jim Crow laws were passed, which blocked people of color from gaining access to the benefits of society. Most recently, Home has been supporting African American households seeking first-time homeownership and those who have been loosened with their homes, losing their homes to foreclosure. During the foreclosure crisis, the Black community was hit harder than any other racial group by the housing crisis. Black homeownerships bought homes at the peak of the bubble at higher rates than white and Asian American homebuyers. They were disproportionately the victims of some prime loans, and in many cases, they were actually qualified for A-paper prime loans. Black homeowners were aggressively solicited for unsafe refinance products that stripped not only their equity, but many of those individuals lost their homes to foreclosure. On average, Black families did not benefit as much as white families from the economic recovery since the market crash in 2008. Of course, when you look at what some call the equal housing ecosystem, it leads to a discussion of injustices in so many other areas, such as the denial rate that is disproportionately high mortgage denial rates among people of color, Then we turn to income and saving disparities. People can't save because of higher rental costs and educational disparities, the criminal justice system, and so on. There's always another layer to peel back. Today, we're going to talk with a good friend of mine and colleague, JoiE Boykins, who went through home ownership program and became a first-time homeowner herself in 1997. And now she works to help educate and empower families to become homeowners as an associate broker at eXp Realty. Thank you so much, JoiE, for being here with us today. It's so good to see you.
Yes.
You and I go way back, when I was a mortgage lender back in the early 2000s. So let me tell you a little bit more about our guest today. JoiE's passion for helping others to achieve the dream of home ownership. She is described as a fun-loving and joy to be around, no pun intended, but also described as a bulldog in heels when it comes to her clients. JoiE Boykins is the associate broker of eXp Realty, LLC, and the broker owner of East Coast Realty and Relocation, LLC, for property management. She's a graduate of Richmond's Association of Realtors Leadership Academy. She's currently and previously the recipient of Richmond Association of Realtors Sales Awards and eXp's 2022 Icon Agent Award. That is outstanding. She is also a member of the Professional Standards Committee for Richmond Association of Realtors, Home Builders Association of Richmond Real Estate Brokers. Her experience in residential, commercial sales, REO, and short sales has allowed her to build a long-lasting relationship with the community. That includes financial institution bankers, buyers, sellers, and returning clients. A personal note here, JoiE is married to the love of her life, Joseph Boykins, for 27 years. You got to tell us the secret on that. And they are the loving parents, I hope I get this right, of Taj and Joseph Boykins Jr., and proud grandparents of their grandpup, Bailey Mae Boykins.
Yes.
Welcome again. Please join me in welcoming JoiE.
Thank you.
Thank you so much for being here with us today. It's so good to see you, my friend. So in your bio, I read that in 1997, you became a homeowner, and with Home's help, tell us how you got to that place in your life, how Home assisted you, and what did that process look like?
Okay, so first time buyer, like most, nervous, didn't know much, but Homes was presented to me by a real estate agent. I think most of the time that's how Homes is presented, as by real estate agents. So went through the program. At that time, it was a little room. I remember it was a room, had to watch a video on a VCR, and it was like a little room. So it was like an interrogation room. And then afterwards, they were like, "Are you finished?" And I was like, "Yeah, where the money?" Okay. But no, I didn't say that. But I was like, "Yeah, I'm finished." And so it did give the education part of the steps into home ownership, of, you know, getting inspected. Because when you first buy a house, you're just like, I want a house. You don't know about getting inspections. You don't know, you know, getting pre-approved inspections, finding the perfect agent, finding, you know, the house, things about the house. Home ownership brings about a lot of education, and Home helps out with that. That's the best part about Home, their education piece. And if I didn't have that, I don't know if I would have been able to get as far as I did, and you know, paying off my house, straight up owning your house, having to pay, you know, paid in full on top of that. You know, we don't see that. So that's how I got my start.
That is awesome. I think one of the things that sometimes people don't realize how important is the education process of that. As you become a better informed consumer, this will allow you to make strong decisions. And I think one of the things that Home has been known for is not only taking people through the counseling and education process, but also ensuring that they have all of the tools and the tricks of the trade that they need to maintain their home ownership. So thank you for acknowledging the work that our wonderful staff does in our home ownership department. So again, how can we, you know, how can we help the next generation of homeowners ensure generational wealth is being built for their families? Because, I kind of gave a little bit of the historical context of where African Americans have come from. We have been suffering for years, not
Right.
able to attain land, become homeowners, generate wealth. What do you say to the next generation of homeowners?
The next generation, I feel, is something, it's like anything. It's something that you see. You see it, you achieve it, you get it. So what I'm saying is basically we need to have better examples on how to do this. We need organizations such as Home to say, hey, you too can own. There, not everyone is meant to own, but if you start out owning a house, I'm gonna speak for myself. My grandfather owned his house. Then he bought another house. He sold my mom and dad's house to them, which is on Clay Street, which my dad still owns, which my kids live in. So it's passed down generation after generation. So when I grew up, I wanted a house, not necessarily, I did go into an apartment, but I didn't understand, like, why do you go in an apartment? But everybody said it's a good start. So I did that. But in my mind, from generational wealth of being a house being passed down in our family. So far that we know of, I have a house that I own that I will pass down to my kids. My father has a house that he will pass down to his kids. So that's how we start generational wealth. Keep passing down the good things like that, homes, property, land. My grandmother had a piece of land in Chase City, I believe. So if you keep instilling that into your generation, it will come out of your generation.
Absolutely. And I think not only that, but just reminding them what the benefits are of becoming
Right.
homeowners. We had a discussion the other day with our leadership team at home about the rising rates of rents. And so we know that many millennials and individuals, they're renting, but rent costs are skyrocketing.
Right.
And so again, how can you share maybe some of the benefits of you becoming a homeowner when you did, especially in the beginning,
Okay.
that first home? Talk a little bit about that first home and what that kind of entailed, because I think sometimes people are afraid, don't think that they have enough capital. They think that they have credit challenges. They are worried about, other things of
Right.
being responsible. Because when you live in an apartment, all you got to do is call a maintenance person, say, hey, come and fix this toilet.
Right.
But when you become the homeowner, you're the CEO, plumber,
Yep.
electrician, maintenance person, everything. So what would you say to individuals who, again, are just still a little leery about taking that first step?
It's like anything in life. It's like a relationship. When you first get into anything, you have to say, okay, let me investigate. You're going to have people along the way that's going to help you. You're going to have home that's going to help you. They help you. When my house, I went through the housing bubble, like most people. And when I bought my house, I bought it with an adjustable rate mortgage, which is called an ARM, which means it can go up. And it steadily went up. But what I end up doing is refinancing. So you have those people that can help you. Yes, owning a home, something goes wrong in a house, but you always, it's like, it's what I always joke. People find a way to go on vacation. You will, if your toilet is not working, you need to find a way to fix the toilet, and you will. And a lot of times you finance stuff. It's always a way to get stuff. And Home also has so much about, I learned so much about Home with their programs of, when you have problems, when the mortgage crisis happened, Home had has a division for that. So you have support. Fear is the only thing that stops you. And if you can't control your fear, that's going to be on them. But most time, Generation Z, and it kind of, they got some oomph, so they'll be okay.
Exactly. And we've got to encourage them.
Yes.
So here we are in 2022, and there is still a major gap in homeownership rates between African Americans and white. It has bigger than it has ever been. In 1960, there was a 27-point gap between Black homeownership. So 38% for Blacks, 65% for whites. And we're still seeing some of those numbers here today. It's even worse now. And so when we look at communities of color and housing, how does society need to do as far as addressing these inequities? Because we're still here and we're still dealing with it. And we know that over the last 2 years, it was a seller's market. Houses stayed on the auction block for maybe 5 minutes.
Right.
So you can attribute it to that. And then many of the clients that we work with, first-time home buyers, were priced out of the market.
Yeah.
So, what do you think we need to do? What are some strategies? And how do you think home can help with that?
Home is awesome. I mean, I'm not saying because I went through them. And
Home is awesome. Thank you.
But home is awesome. I've had clients in this market go through home, even with, the situations of the being outpriced in the market. It is difficult in this market. A lot of buyers are doing, I don't know where these people work, but they're using cash to get them done. The segregation part, which is the saddest part, it keeps the communities from growing when we just have one thing. This is America. We need all. We need everybody, everyone. When you don't have that, it affects education. It affects jobs. It affects market growth, because you're looking at one or a single community on a certain way. It affects all the way to food shortages, food deserts. So we need to make sure that we have communities that are mixed evenly. And that way it helps with the jobs, which helps with the financing, and it helps people get more qualified for higher loans. It helps out all the way across the board that way. But when we have it segregated, it slows everything down. It slows all the markets down, really, because that money is not being recycled into that community.
Yeah. And so we know that segregation keeps our communities from realizing its full potential, as you would say.
Yes.
And we're seeing it probably in every area of the housing ecosystem, from individuals being homeless, from rental, from home ownership, foreclosures. Our discussion a couple of weeks ago around segregated housing patterns, some of the same challenges that we're seeing ongoing. And so I think that from a home standpoint, as we try to ensure that everyone has equal access to housing, we want to be involved with a societal shift around making sure that we have more integrated housing patterns. And that is similar to what we've been doing for the years to come.
Right.
Many of you all may have heard about our settlement with Fannie Mae, as they were actually not taking care of, REO properties, foreclosed properties, and African-American neighborhoods compared to those who are white. There was an article that came out, I think, last week about a lender who continues to not, their lending disparity rates for their African-American buyers were extremely low compared to other financial institutions. And so, home wants to be involved with that, wants to continue to partner with the real estate market. But again, we want to remain competitive,
right,
and make sure that we're able to help individuals. So my last question to you, and then we're gonna take some questions from our audience, and for those who are joining us virtually, is can you talk a little bit about, again, some of the trends that you have seen? What are some of the challenges and some of the things that are really impacting first-time home buyers and their ability to pursue home ownership? What are some of the things you're seeing?
Lately, when making offers, sellers aren't helping with any closing costs. They're getting to a point now in this market where they're not helping with closing costs. Sometimes when they see certain lending like FHA or VA, there are some cash offers that are being offered. So when you get offers for cash, cash is king. They're gonna, the sellers are gonna roll with the cash.
Right.
So that has been really hard to working with the first-time home buyer. They're saving up as much as they can. They're using their 401k. They're using their blood, sweat, and tears. So if we can find ways around that, that would help out, because that would make them buyers more competitive. Like I said, this cash is been the main thing. And then also they're looking at, hey, this is a VA loan, FHA loan, that appraisal may be a little bit more stiffer. Also, they're doing stuff like selling. The sellers want it to be sold as is. They don't want to look at inspections.
Or doing any repairs.
Yeah, they're not doing any repairs. They're not, and so the buyers have to, when they see an offer that said buyers waiving inspection, when they say waive inspection, that means they're not getting the inspection, as opposed to when people say, okay, I'm buying it as is. If you buy it as is, you still get an opportunity to do an inspection. But when you waiving an inspection, you're just saying, I'll see the house when I get my keys.
So how do we overcome, I know I said this was my last question, but just a follow-up question to that. How do we overcome that? And, why is homes work so important? Because you talked about the barriers of, cash offers. You talked about inspections. There was a study done by the National Fair Housing Alliance about appraisal bias and about, that's going on. So there are just a multitude of things. And then, the actual credit world, the lending credit score is driving everything as far as qualification.
Yes.
If you're not a member of the 700 club, it's going to be an issue. So yeah, can you talk about, why realtors should consider home, and the resources that we have, if you can kind of share a little bit about that.
Oh, yes. Using home is the best. Like I said, I'm gonna keep saying your education piece.
Yeah.
The education piece sets expectations. So, and I like, some of the counselors here, when they set the expectation, hey, right now you have $1,000 in your account. You're doing a FHA loan, down payment is like 3.5%, closing costs around 3.5%. So you're looking about 7%, not as much, some give or take some, but on the same note, you're going to have to save that. So if you are looking at a $200,000 house and they're not paying any closing costs, Homes is going to help you. That's why we need you. We need the contributors to contribute more, because maybe Homes can do a cash situation where they start doing cash. I mean, I'm thinking big for y'all, I'm thinking big, But
listen, we're gonna start, we're fortunate enough, and we've had some great relationships with jurisdictions where we have down payment assistance for the city of Richmond, Henrico County, Chesterfield, statewide. So we've been very fortunate in that. So who knows what's next in our strategic plans. But again, I think that to your point, that I hope the message today is that, seek support, seek guidance, call home, go through our education program. Even if you're not ready yet, still go through the program so that you can make sure that you get
What's the
educated.
email address? I mean, so they can go on the site.
That's a great question, but I'm
gonna make you laugh. I'm gonna make you laugh.
You know it?
No, I know. So the original one that
I know our website.
I know that's what I meant. Website.
Yeah.
So
HomeOfVA.org.
HomeOfVA.org. So I'm gonna make you laugh. So phonehome.org was the site back then. And it still works.
It still works. Yeah. Somebody was asking about that yesterday. Do we still have the phone? And so all of those.
That's all I know.
Will
they guide you right there.
Yeah. Well, listen, this has been a great conversation.
Yes, always.
Thank you so much for your time. Please join me in thanking our guests today.
Thank you.
And so I think we have some time for a few questions. And so while we're waiting to see, any questions here in the room? Any questions here in the room? Oh, we got one.
Hi, my name is from how do you scan financers or banks or loans for whatever home you're trying to get? So let's say if you're trying to maybe upscale it with a multi-family, how would you go about finding cash or finding the funds to some of these homes?
Yeah, I think that's a great question, and I can kick it off, and if you want to add anything, JoiE. But I think as you start the process, I think it's really important to start working with lenders and shopping 2 or 3 financial institutions. I always encourage people to start who you currently have your banking relationship with, whether it's a large financial institution or credit union. It's always good to go and shop and see what you have available. For first-time home buyers, JoiE mentioned FHA loans, which are government loans, VA loans, and then there is the statewide finance agency, Virginia Housing. They also target and have resources available for first-time home buyers. So it's good to see what you qualify for, have an idea of what that is, but come to home because we can work with you and counsel you on that journey, set you up on an action plan to kind of help you get there. Make sure we have a good idea of what your goals are, what you're trying to accomplish, whether you have a contract in hand and you need to close in 60 days. Everybody needs to close in 2 days. That's not, in most cases, that's not realistic. But again, just working with lenders just to kind of see what you qualify for. Because it's a good thing to say, hey, I qualify for $250,000, but you don't want to go out and shop for a $450,000 house because you're going to get a little disappointed that you won't be able to afford it. So working with home to get all of the nuts and bolts about the process, and then connecting with a realtor to kind of make sure that you are showing properties that are within your budget is really important. Yeah.
Yeah, I was gonna say, most of the time, if you have a good realtor, they will give you some of their connections, because a lot of times we work as teams. The loan officer and it's like I always say, I'll flow. I say I'm translucent. And I say I'm translucent because I'll flow how you flow, and you're gonna see right through me. Because I'm gonna tell you, all right, I work better with this lender than I do with this lender, and this lender has this program, and this lender has that program. Because each lender, I have about 5 lenders that I work with, but I try to set them up with a lender that works well. So if I know this lender works well with home, I'm gonna send them straight to home. First of all, you should go to home anyway, just to get the education. Even, people that are first time buyers, because sometimes people have some new money,
Right.
but they still want to know the process. They may not have to use home, but they do need the education piece of it. So first things first, find yourself a good lender, figure out what the best rates are, find out if they have points, find out, just figure all of that down. Because also the other thing is, if you're in this market right now and you're like, I'm gonna stick with the 200,000, and you qualified, your max is 200,000, you may want to start at 180 so you can compete. So those are some of the things you'll talk to your real estate agent and work with homes about.
Yep. Thank you. Any other questions? Thank you for your questions. Yep, we've got some questions from our chat. So just give me a second here. See if technology. Is there anything that will disqualify the buyer from being able to go through the home program? That's a great question. Anything that would disqualify from going through homes program? There is a couple of things. So again, each of the localities that we receive down payment assistance from, there are some maximum limits. Again, if you're trying to buy a $450,000 house out in Chesterfield, unfortunately, I think our max in Chesterfield is 280. 283. So that would be the only thing. That's one of the things that would disqualify you. Plus, you do have to have a certain credit score to meet the requirements for most of our programming as well. Okay. All righty.
Yeah, some of the houses don't qualify too.
Yeah.
Don't look for a fixer upper with home.
Exactly.
Don't do that.
Okay. All right. Here's another question. Are there any low interest rate loans for veterans that own rental property? That's a good question. So I know for veterans, there is the Veterans Administration program, but that is for home ownership. I am not aware of any special interest rate programs to purchase rental property. If you're trying to do it as an investor, then of course you would probably have to qualify for regular conventional investor loan.
They do have some.
Yeah.
It's going to be according to who the lender is. Some
Right.
lenders do have
Okay.
VA investment. I only know because my sister-in-law is doing one right now.
Okay.
She's a realtor also. But that's a good question. But that would be through your lender, whoever
Yeah.
your lender is.
Okay. All right, we're gonna take one more question from the internet. And let's see. Okay. No, I think that's it. I think that's all that we have. Oh, no, here we go. Is there a lender that can give me a lower interest rate on a home if I have less than 15 years left on a current loan. So I'm assuming that this individual is talking about refinancing their mortgage. And if so, that I know that there are, terms and interest rates, based upon anywhere from a 10-year up to a 30-year in Virginia. I know some other localities it will go up to 50 years. But typically, I think the longer the term, the lower the interest rate is, if I'm not mistaken. Am I saying that correctly, team? Reverse. Okay, yeah. The shorter the term. Thank you. Thank you. I'm going to bring the expert up here in one moment, but yes, so that will vary there. So if you have less than 15 years, then you could potentially refinance it, I guess, as low as 10. You could also take out an equity loan or equity line on your home. So that would vary. So I would encourage you to maybe reach out to your current lender to see what options that you might have, or shop around through others. So, okay, well, our time is gone. I thank you all so much for yours. It was a pleasure talking with you today, JoiE. Thank you so much for being home's #1 cheerleader and just sharing your experience and just talking with us about some strategies to help us continue to reduce the racial homeownership gap. So thank you again for your time. We appreciate you being here today, and you enjoy the rest of your day. Please join me in thanking JoiE Boykins for being here today. And so if you could.
Yes.
Brenda? Okay. All right. Thanks again, JoiE. So you've heard a little bit about our past, and we talked about some really critical things around first-time home buyers. And now we're going to talk a little bit about our vision for the future. I want to now introduce you to Brenda Hicks. She is our Director of Housing Counseling and Education. And so she's going to share with you a little bit about things that are happening going forward, things for us to consider, and we'll have a few minutes to talk to her as soon as she finishes. Welcome, Brenda.
Hello there. Look, I said, I think you and JoiE have done an excellent job already, and I do appreciate that. I said, they're making my job a lot easier.
Oh, no.
I said, but then they covered a lot of my subject matter too. But we're going to do a quick review of this. And so I'm going to get started with, if you all are going to be showing the PowerPoint, we get started on the rating. One of the things I wanted to just share with you is what are the current home ownership rates by race. But I wanted to start out and just talk to you about the national rate of home ownership on a whole actually peaked in 2004. So owner-occupied homes in the United States, 69%. But after the 2008 housing crisis, now it has declined, and home ownership rate nationally is 64%. However, Virginia is actually at 66%. So we're actually doing better than the national average right now. Yeah. And I'll even say we have some jurisdictions such as Chesterfield County, which 77% is owner occupied. Right. As we look at it from a race standpoint, you will see that in the Richmond region, the city of Richmond has one of the lower home ownership rates, which is 44%, and that's the total. However, their white households is at 54%, and their Black households are at 34%. And I also included for this particular slide, the Hispanic rate, which for Richmond is 31%. Chesterfield, as I mentioned before, has a 83% of their white households own, 67% of their Black households own, and 52% of their Hispanic households own their property. And then in Henrico, total home ownership rate is 61%, but 70% of their white households own their homes, and just 49% of the Blacks own their homes, and 36% Hispanic. And so, as was mentioned before with Monica and JoiE, like, why are we talking about this? We're talking about this because it's really important to understand the benefits of home ownership. And the benefits of home ownership, next slide, please, is all of these things that are listed here. I'll talk about the community first. It increased the tax base for the jurisdiction. That's a good thing. You get your parks, you get your schools, you get your green spaces, you make sure you don't have food deserts. Increase in the tax base, good thing for the community. Same thing, boosting the local economy. You buy a house, there's commissions and fees, moving expenses. We know you're gonna buy furniture, right? Everybody's gonna buy furniture, and then that money recycles back through the local community. And actually, we looked at it even just from the standpoint of the sales prices of our homes some years back and just covering it because they're low to moderate income folks. Even a house sold at $50,000, the economic impact is $50,743, according to a National Association methodology that they use to say what the local impact is. It provides families and neighborhoods stability. The social benefits to children, it increased their educational performance. It increases health outcomes, as well as lower crime rates. The one thing I wanted to leave at the end, which is a really big one for me and for everybody, is that it builds wealth. You know, the one thing I always share with folks is, who wants to be broke living in a capitalistic society? No one.
Right.
And the foundation of most people's wealth in the United States is their home. Can we go to the next slide? Homeownership is the foundation of wealth creation in the United States. If you look at it just from a standpoint of the general homeownership rate versus someone who rents, the Federal Reserve noted that homeowners' net worth, and this was actually 2016 was the last statistics I could get. A homeowner's net worth is $231,000 versus renters $5,200.
Wow.
And then when you start looking at the wealth gap of Blacks and whites, it is the thing that impacts the most this gap is homeownership, and then the length of homeownership. And that's why it's important to be able to talk to young people about making sure that they get in early on purchasing a home. The Brookings Institute, as you see here, talks about the impact of homeownership on wealth. And you see for white households, $171,000 compared to Black households, $17,600. And so there's a huge difference there.
Major gap.
And so as we go to the next slide and talk about the contributing factors of homeownership equity, Monica, thank you. You did a great job in sharing what some of the historical discriminatory policies was there. I mean, who knew that the federal government actually perpetrated some of these things? And unless you're knowledgeable about it, and I was speaking with one of our VCU professors who's here today before we got started, and we talked about, you know, who knew? And if you don't know these things, then sometimes when you hear about different initiatives and things like that that is going on, then you're like, well, why are they doing that? Because there was intentional discrimination against African Americans by the federal government. FHA in 1938 provided funds for developers to build white subdivisions that specifically excluded African Americans. Then the Homeowner Loan Corporation, who I would say created the first redlining maps of America, you know, it gave support to real estate practices that segregated America. And then there's studies that show now from the American Economic Journal from 2021 states that those maps that were made by the federal government about where mortgages and where credit's going to be given basically has increasingly segregated us by race over the next 35 years. And that's starting back from Reconstruction.
Yeah.
And then, of course, the Jim Crow laws just multiplied everything. And so this is why we do some of the things that we do. There's an insufficient supply of affordable housing. And I'm just gonna list the things down pretty much. You know, there's nothing right now that truly requires the jurisdiction to have affordable housing. I don't know about you, but when I drive in to Richmond every day from Chesterfield, every apartment complex I see in every subdivision I see, it's luxury. Well, everybody cannot afford luxury. And when you have local governments, they have got a responsibility to everybody, not just luxury. We know that's where people make their money, but as a locality, there's a responsibility for a public good such as housing to make sure it is distributed in an equitable way. Then, of course, we deal with discriminatory practices in the housing industry from, you know, there's always bad actors in any industry. We're definitely not painting a brush. We had JoiE here today, who's an awesome realtor, definitely part of the fan club for home. But there are some others who will only spend 10 minutes with me, but my white counterpart will come in and they'll take an hour. They may not even return my calls or send me that follow-up email or tell me about all the loan products that are available to me. Why? Because guess what? African Americans can have performing loans just like anybody else, but unfortunately, sometimes there's discrimination and differential practices among industry folks. Access to credit. Somebody want to know how come you didn't go to the bank? Because there's not one in your neighborhood. No access to credit because there's folks who have differential treatment to folks based on what they look like. When we talked about tightening up the credit after the housing crisis, okay, who got beat up the most? African Americans. And then what did the banking industry do? You tightened the credit to a point, well, guess who could not get credit? African Americans. So the same people who were victimized with predatory loans, you know, they say subprime loans. I call most of them predatory because that's exactly what they were. When they tighten the credit market, just like Monica said, you know you need to belong to the 700 Club. Well, guess who's in the 700 Club? I was looking at the statistic and it showed that on average, and this is from the Federal Reserve Bank, and it talked about that whites' credit score typically on average in white areas is 716. On average for Black and brown areas, it's 638. So who's in the 700 Club and who's been left out of the market? I think the story's told with the numbers. Student loan debt. I know, I see somebody in the audience just shaking their head. Student loan debt. Okay, one of the things that you can do with your home equity is help put your kids through school. So if you own your home and have owned your home for a long time, guess what? You can take a little money out, put your kids through school. They don't start off with all that debt. But unfortunately for us, the debt is there and it's usually at least 3 times the amount that our white counterparts are. Rents are high. We know that they're high. Here in Richmond, the national rate of rentals going up is 11%. In Richmond region, it's 21%. And then the lack of intergenerational financial literacy, just like JoiE said, when that information is passed down through your family because they bought a home, then you can transfer not only that financial literacy, but the wealth that goes along with it. So what do we need to do? We need to be intentional. Everybody needs to be intentional. If you go to the next slide. We need to increase affordable housing stock. We need to be talking to the jurisdictions about making sure they have inclusionary zoning, making sure that everybody's served. When you want to bring new businesses and new housing into the area, make sure it takes care of everybody. Jurisdictions should be required to have mixed income housing. Strengthening the Home Mortgage Disclosure Act, which is supposed to tell the community whether credit needs are being served by all neighborhoods. One of the things that are left out is the credit score, because that really tells the whole story. And so if we're going to be able to assess that, we need to strengthen that. The other piece is we need to strengthen the Community Reinvestment Act. Basically there, with all the branches, it was put in place to make sure that it reduced discriminatory credit practices against low to moderate income families, redlining. You got to have branches in areas, but not only that, they're not the only ones doing business. A lot of our clients now, they're using online bankers. If you're doing mortgages in Virginia, you need to be covered by that. And you need to make sure that you are a part of those people who are making sure that there's access to credit in all types of neighborhoods. The other piece is implementation of restorative initiatives, just like the ones that were put in, an example of one that was put before Virginia this year, which was the Restorative Homeownership Pilot Program. We need to intentionally address past housing policy discriminations the way we were intentionally targeted back when it started. Now, some extra things that Home can do. We plan to expand and better enforce our fair housing laws. We need to be testing in all areas of the housing transaction and giving a real good look at these new algorithms that they have. You know, when they say automated processing to get credit, we need to look into that to make sure that they're fair, because even though it may be automated, there was a human who put it in place for good business, and we want to make sure good business includes everybody. And then we need to increase our education opportunities to everyone about fair housing. I think everybody that's in a housing transaction, from the realtor until the day of closing, need to have fair housing education. And then the other piece we need to do is to increase our financial and homeownership opportunities to educate our young Black folks who are millennials, Gen X, and Gen Zs to get in the game quick. They want to folks want an early start on living their best life. So we need to teach them how to manage their money and get in this wealth game early. Okay. And the last thing, we cannot, they say I'm overtime. It's like at the church, they pull up on you because your testimony is too long.
I'm trying to kick her under the table.
Under the table. I'm like, what you want? What you want? But the last thing is we've had wonderful relationships with our jurisdictions and increasing down payment and closing costs. And we've been working with them and they've been doing that. I think JoiE was talking about back when she did it in 1997, they were given like $2,000. Now, City of Richmond is committed to giving up to as much as $25,000. In our other jurisdictions, Chesterfield and Henrico, we're working on helping them get to those levels as well. And we want to also make sure Virginia Housing has a wonderful program that reduces interest rates by 1%, which is called Spark Funds right now. We want that kind of funding to continue. And so there's a lot of great things. Home's been around for 50 years, and we've done a lot of wonderful things, but our best work is ahead of us.
Yeah, so thank you so much. Join me in thanking Brenda. I hope that you could not only hear, but feel Brenda's passion about this work. And she touched on so many things that I wish if we had another hour, we could unpack. But I think if I had to surmise what Brenda's message was to us around home ownership, is that definitely there's a lot of work that needs to be done, and we've got to change systems. We've got to make sure that we're advocating. We got to focus on policy changes. We got to continue to educate and do outreach and direct services. but it's going to take all of us. But please know that home is leading the way. So again, thank you so much, Brenda,
Thank you.
for your presentation. Great
I'm
work
sorry
as
that I went
always.
over. I want
That's
to respect your
okay.
time.
That's okay. I'm just going to peruse through my closing remarks. But before we get to that, I would love to see if there are any questions from our participants here in the room. And then I will see if we can take a couple of questions from our virtual viewers. Okay. Any questions in the room? Okay.
I think you all answered all of them.
No, we got one. We
Okay.
got one question in our chat, so we'll take that. So, what do you see as some key drivers towards and away from better social, economic, and racial integration in Richmond neighborhoods? That's a great question.
Okay.
Key drivers.
Key drivers. Key drivers will be if you're in a locality, is to do something that I was in a session with the gentleman who wrote the book of Color of Law. And he said that, when Black Lives Matters was out, came out, there was over 20 million people who were out in the streets with those protests.
Right.
He said, you know what we need to do? We need to get some grassroots efforts to make sure that things are going on in the local areas, to be able to boost our housing, making sure the kind of investments that are needed to be done are done in the community, especially those who have been disinvested over the time, making sure that your locality don't have food deserts,
Right.
that your locality have parks, green spaces. And so what he said was, we needed to do more with those folks rather than send them home and put a sign and give them a sign that said Black Lives Matter.
Yeah.
We need to find some ways to really, really make some efforts at the local levels. And I think we would be able to do those kinds of things if we
Inclusionary
can
zoning.
get those folks with inclusionary
Zoning.
zonings to make sure that affordable housing, if you need multifamily, put multifamily there. It might be more affordable for people, and really have them to make sure that your voice is heard at the local levels.
And Brenda, I would just add that I think we would all agree there is an ongoing affordable housing crisis.
Yes.
And I think that it's an opportunity for localities to explore all types of options to make sure that we're integrating housing into every areas and neighborhoods, mixed use, mixed income. There's so many models probably around the country and other parts of the state of how they are working really to address a lot of the social, economic, and racial integration issues. But that was a great question. We're going to continue this conversation, but I'm sorry, our time is coming upon us. So let's thank Brenda Hicks again.